Google McDougal, let's talk about this one first, and then we'll get into all those other subjects, okay? First off, Google, why is this stock such a great buy? Well, the thing you got to understand about Google is the sentiment's really bad around Google for the last, I would say, at least 6 months or so. Very poor sentiment around Google, and a lot of it stems back to ChatGPT and how much that has taken off over the past 2 years. And since ChatGPT has taken off and become so popular over the last 2 years, people are wondering, is Google search being disrupted? And it's created this very bad sentiment around Google stock right now, okay? No, I want you to think higher level when you think about a stock like Google, okay? First off, I mean, it seems like just about everybody uses Google maybe once a day, maybe multiple times a day, right? I have Google on my iPad, I have it on my phone. I don't think there's a day that goes by where I don't Google something at some point in time. Now on work days, I Google a lot more. But I think even on just like, if I'm like taking the day off, right? Which I don't know if I really ever completely take a day off, but even when I do that, like I'll still end up Googling something like, oh, let me look at this restaurant. Let me see reviews, what people are saying about it on Google. Like a lot of times you end up using it once a day or sometimes many times per day, right? And some people don't use a Google app. So instead what they'll do is they just go to google.com, right? Now, additionally, they own, obviously, Google Chrome, which is a massive player when it comes to the browser, right? And we're talking 65% of the worldwide browser market share Google Chrome has. Now, the interesting thing about Google Chrome is it seems like it's bigger now than it's ever been before. But in reality, the market share has actually decreased in this company from where it was back in 2018. In 2018, the market share for Google Chrome actually peaked back in 2018 at 72%. So even though Google Chrome market share peaked 7 years ago, Google Chrome seems just as relevant, if not more relevant today than it did all the way back those many years ago, okay? Now, additionally, they also own YouTube, right? Which is probably, well, that's what you're watching this on right now. We do repost these videos on X as well, but high probability you're watching this video on YouTube right now, right? Now, YouTube is what Google bought way back in 2006. They paid $1.6 billion for it. And nowadays, through advertising and subscriptions, YouTube's revenue is now $50 billion plus. $50 billion plus a year, right? YouTube is an absolute behemoth of a company. And, there's going to be a day when YouTube's likely doing $100 billion plus in revenue between everything YouTube related. Like, it's just incredible numbers. And it's a very hard thing to disrupt just because of the long form video format is so phenomenal on YouTube for videos like this, right? That are going to be, 20, 30, 40, 50 minute, hour long videos. Like there's just nothing better than YouTube out there for that. TikTok's really good for those like little 15-second, 30-second type clips, right? Instagram Reels is really good for a lot of that as well. But when it comes to the long form video content, like YouTube just really dominates when it comes to that, right? Now, we look at Android as well. Google owns Android. Android has close to a 75% market share of mobile operating systems. Keep in mind, there's really only two players in mobile operating systems. Everybody else is really a joke in the space. It's either Android or your iOS. Like every single person likely watching this video right now, you either have an Android smartphone or you have an iOS smartphone. It's one of the two, right? And you're likely watching this video on it right now. No, the interesting thing in regards to Android, it's actually been growing market share recently, while iOS has been losing market share. And I think a lot of that goes back to actually not even really software related things. I think a lot of it's hardware. And I think a lot of people haven't been that excited about the hardware Apple's put out in the last few years. It seems like a little bit of too much copy and paste. And so Android's actually been growing market share, but they're by far and away the biggest player in mobile operating systems, which, mobile operating system continues to dominate. Like someday the smartphone will be disrupted, right? And this huge Android market share and iOS market share will be disrupted. But when is that? When is the day like we have a device that like is AI enabled and like maybe we just have glasses on or something like that, where we feel like we don't need a smartphone anymore? Like, I don't know when that is. Maybe it's 5 years from now, maybe it's 10 years from now, maybe it's 20 years from now, maybe it's 30 years from now. There will be a day when that happens, but it's not today, and it's not tomorrow, and it's not next year. We know that, okay? It's no time soon. So the moral of the story is Android and iOS are going to keep cleaning up money for a long time to go in the future. It's just a question of, are we talking 5, 10, 15, 20, or 25 years, right? Now, additionally, they have a business called the cloud. And their Google Cloud business is unbelievable. Just in the latest quarter, they did over $12 billion of revenue from their Google Cloud business. Now, two important things to keep in mind. This business is rapidly growing. If you look at the same quarter last year, they did $9.5 billion in revenue for this business line. The other thing to keep in mind is the profitability of this Google Cloud business is taking off like a rocket ship. Google Cloud used to lose them large amounts of money. Look at how rapidly they're increasing their profitability here. Operating income on Google Cloud in this same quarter last year was $900 million. In this latest quarter, it was almost $2.2 billion of operating income. Well over a double up on a year-over-year basis. The Google Cloud business is becoming an absolute profit giant for Google. And this is still early days in regards to the profitability of this business model. Keep in mind, this business model should get to a run rate where it's doing over $100 billion a year in revenue. Now, if they're doing $100 billion plus in revenue a year, I think there's a pretty safe assumption that they'll be throwing off operating income of, I would say, anywhere from $20 billion to $30 billion. And that's only in a few years from now. I don't think we're going to have to wait a decade for them to hit a $100 billion run rate in revenue. I think that's happening just in a few years from now. So in a few years from now, we'll likely see $100 billion plus a year coming in revenue from just Google Cloud. And then we'll be seeing likely 20, I would say, to $30 billion of operating income being thrown off a year from Google Cloud. Now, if Google Cloud was its own separate business, you could say Google Cloud, could easily command a valuation of, I would say $500 billion to potentially $1 trillion, depending upon how fast their growth rates are after that point, right? So keep that in mind. And that's a behemoth of a business. Also, what's a great business they own? It's called Whimo. Whimo. This is a huge money loser for the company in the short term, but I would say if we fast forward 5 or 10 years from now, it's going to be a massive money maker for the company. Now, Waymo is clearly, in my opinion, the leader in self-driving vehicles at this point in time. They already have their service in Phoenix, which I've taken in Phoenix a few times now. They have it in San Francisco. I've taken it a ton of times when I've gone to San Francisco. They have it in Los Angeles. They have it in Austin, Texas. They have it in Atlanta. And they also are expanding to more cities this year, and they're also testing in a ton of different cities as well. So I would say within the next 5 years, I don't even want to go 5 years. I would say in the next 3 years, you'll see Waymo in every major city in the United States of America. I think if it's 3 years from today, I don't think there will be a major city in the United States of America where Waymo is not in. And then after they get into all the major cities, it's just about scaling. And then from there, it's about, expanding their service to more, rural communities, like maybe smaller towns, things like that, right? But that's going to be that's like in the 2030s, we'll be talking about that this point in time. The 2020s is really just for them to expand into every major city across the United States of America and scale, right? And, this is a photo somebody posted on X here today, Whimo in Boston. So great to see Whimo out there in Boston. And the interesting thing is, in these major cities that Waymo's in now, keep in mind, the market share is going to be growing rapidly. Like rapidly. This shows you San Francisco and what has happened to the Whimo market share just over the last couple of years as the latest data out here, which was way back in kind of like March, April timeframe. And look at how they have now eclipsed Lyft in San Francisco, right? Let's fast forward another 2 years. I think they're going to easily eclipse gross bookings of Uber if we fast forward another 2 years, right? In San Francisco. So keep in mind, Whimo is the real deal Holyfield, and I don't see it slowing down. I just see it speeding up. And the great news is for Google, they've got all the money in the world. This is a big thing you got to understand about this. They have all the money in the world to spend to scale this business rapidly over this next 5 years. They've got it, man. They've got it because their core businesses are so incredibly profitable that they can get in a price war if they want. If there's any serious competitors to them, whether that's Tesla or others, they'll be able to beat them in price if they want. They might not take that approach, but they'll probably take that approach. Like if it goes down to a price war, you do not want to go against Google. Google's one of the, they got the most profitable businesses arguably in the world across the board. Like think about the cloud business, how that's big that's going to be in a few years. Think about Google search business, think about the YouTube business, right? Android, all these things. You want to go against them? I wouldn't want to go in a price war against them, right? So what will end up happening likely is they'll be I don't think anybody's going to want to go to a price war with them, which means Waymo could end up being much more profitable than we anticipate if we fast forward 3 or 5 years from now, right? And there's a whole advertising opportunity that comes with Waymo as well that people aren't even considering. People are thinking about, like, people signing up for Waymo plans over time and paying like a subscription fee to that, right? That will give them like discounts on rides or other things. People aren't even thinking about the advertisement opportunity that Waymo is going to have by knowing where you're going and where you're getting rides to over time. That's going to be incredible for Google there, right? Now, additionally, everybody's kind of written them off in regards to AI chatbots, right? Because everybody's like, oh, ChatGPT, they're dominating, they're so big, no one's going to beat them. There was a time period when you could have looked at Google in the search market and been like, Google has no chance. Like Yahoo search is dominating, these other search engines are dominating. Google has no chance, right? And that's the way a lot of people are looking at it. But I'm looking at Gemini here, and that's up to 13.5% market share now for generative AI chatbots, right? And it's not far behind Microsoft Copilot. I wouldn't be surprised if we fast forward a year from now and it's already eclipsed Copilot by quite a substantial margin. I wouldn't be surprised if that happens by the end of the year, right? And I think it's going to continue to eat into ChatGPT's market share over the next, I would say, 5 years or so, right? So I think it's very, very early to try to write off Gemini as like, oh, it's not going to be successful. I think it's going to be very successful. Look at the estimated quarterly user growth this latest quarter, right? It was estimated that Google Gemini grew faster than Copilot and grew faster than ChatGPT. ChatGPT looks like it grew about 7%. Copilot grew about 6%, Gemini grew about 8%, okay? And I think the way they're going to be able to integrate Gemini into YouTube over time, to Google search, and continue to get that built out and market it and get people to use it, I think they're going to do very well at that, right? And the scale, I mean, you're talking about billions and billions of people use one of Google properties on a daily basis, either Google search or the Chrome browser or Android, right? Or YouTube. There's a lot of touch points. And think about all the people that have Gmail, email addresses. There's a lot of touch points there, folks, that I think they'll be able to get people to use Gemini over time. And so as long as the product's great, right? And I've tested it. I've been very impressed with Gemini's product. I think they're going to keep scaling that out, right? The best thing about Google might be the fact that this company trades at a forward P under 20. Like what I just ran you through there is an unbelievable business model, right? And I didn't even run you through, by the way, there's more businesses than I even just ran you through. Google owns even more businesses. I just want to run through some of the most important ones for you guys, okay? So here's what we're getting with Google. Forward P under 20, right? Double-digit revenue growth. Earnings per share that, in my opinion, is going to grow far, far faster than revenue over the next 5 to 10 years. You're getting an insanely diversified business model between all those businesses, right? It's incredible. I mean, everybody talks about disruption. I think it's pretty tough to disrupt Google with how many insanely great businesses they have, right? And how many growth businesses they have. And you're getting a business with great margins, like one of the best business models we've ever seen in the history of mankind, right? It's attractive. It's a very attractively priced stock, especially given this market we're in right now. I like it. I like it a lot.
Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com Enjoy.
Said kick off in a couple hours. We can show you the calendar, which really lays it out. Mostly next week, but some important ones are this week too. What's at stake?
Well, first of all, that stretch begins with you coming back. Great to see you.
Did he behave himself while I was gone? And he being Weiss?
Modestly, but I know now that you will rein him in and keep him under control.
Okay.
I've been
I'm
unleashed.
well rested.
You are well rested.
He was unleashed when I was gone.
But look, Scott, I mean, while you were away, and even today, it's just a
Weiss was having the time of his life when he was gone. Remember, he was laughing, he was joking with the woman there. Oh, man. Now Scott's back. It could be tense again.
continuation of really, really good news for the market to cheer and applaud. And several weeks ago, I told you I expected that the third quarter, this was the potential quarter where you get a little sideways to lower action. I still think the leading indicator for that is going to be the semiconductors and going to be the technology names. So here we are. We're stepping into earnings. Alphabet, Tesla, IBM. Next week, obviously, we know the rest of the Mag 7. And they're going to be critically important. They're going to be critically important because what you want to pay attention to is the reaction. What is the reaction? Do we get a continuation of a lot of good news and good price action, or do we finally signal that there's exhaustion in the market, the need to pull back, good performance, you get the good earnings, but you don't get the performance?
There's not a lot of exhaustion. It doesn't look like.
Not anywhere. Not anywhere.
Joe T's at a record high. That gives you an idea of the momentum that remains behind this record-setting rally, Jenny. So you have a lot on the line for a lot of stocks that have done unbelievably well over the last 3 months. From the mega cap space, that is where the epicenter of this whole thing is. Nvidia's up 65% in 3 months, Meta 36, Microsoft 34, Tesla 33, Amazon 26. Alphabet's up only 22%. Only 22%, and no one owns it today. Why? Why? Did people write this company off and their position within AI too much too soon? What do you think?
I think this is a welcome back to you, which is that I own such a small piece of Google, Alphabet, that I sold 95% of the position, but said, you know what, it's pretty cheap. I do have my concerns. So I am participating, not in any meaningful way. If stock doubled from here, it really wouldn't matter. I think the issue is still there, and I think why people bought it is that Whimo is number one. And if you take a look at what happened after we had Tesla have their robo-taxi announcement, it started moving up when people focused on that. And I also think that they're looking for companies that are cheaper, that are left behind. So they may have enough Meta, they may have enough Microsoft, they may have enough of the other Mag 7s to say, look, they stand a really good chance of definitely being in the conversation with AI, and right now that's more important to me, as is Whimo, than perhaps losing share in search.
So Mr. Short Hills Capital here brings up a phenomenal point. Listen, I could even look at myself. Why did I go buy Google stock, April 23rd or whatever, right? And I'm doing phenomenal in that position. But why did I do it over Meta? Well, because I have enough Meta. I have so much Meta, it's coming out of my ears. There's too much Meta, okay? And so even if I like Meta as a better investment opportunity, just from a risk standpoint, I can't really buy more Meta because I have so much invested in Meta already, right? Between my different portfolios. Google, on the other hand, I don't. And Google I like for the next many years. And Google trades cheap. So what happens? I buy Google, right? And so the point he brings up there actually is a very good point, and I'm sure I'm not the only person in the market who's thinking that way.
Your pal Farmer Jim made a good call on this name.
Sure did.
Yep. On the day of the Eddie Q sell-off.
Yeah.
Right? He's in a courtroom. He's talking about, first time ever, we see a drop-off in search. And the stock's like, stock goes down, everybody, including many on this desk.
Josh and I pushed back on him at the time. Sorry, Jenny. We pushed back.
Maybe this is existential now because this is what they are. This is at their core. And the stock's up 25% since that day. 25% since these quote-unquote Eddie Q sell-off.
Yeah, but that's a small time period. So maybe if you're a trader and you nailed it on that.
The stock's up 25% since like a tremor.
Okay, and it's up 1% year to date, and it's up 5% over the last 52 weeks. But I'll tell you why we don't own it. Because this is one that I've been telling you, Amazon and Alphabet have been kind of pecking at the edges of our screen every week for our disciplined growth strategy, where we're looking for high free cash flow yield. And the free cash flow yield is getting there. But here's why we haven't bought it. And it really boils down to just this. Gartner's forecasting a 25% drop in 2026 in single search engine queries. At the same time, you look at Meta, and they've got 90% margins in their single search engine queries, right? So however you look at it, even if they do great in AI, even if they do great with Gemini, it is not as profitable as the main business, and that keeps us at bay. So you look at it and you're like, okay, 19 times, decent earnings growth ahead, but compared to all the other Mag 7s, I think that their earnings are more at risk. I know me personally. I am borderline not using Google to search anymore. I'm using ChatGPT, I'm using Claude, I'm using Grok, I look at Gemini a lot.
Perplexity,
It's just
and on and on and on and on. But
you can, okay.
But maybe that's why the mobile's had a 40% discount.
That's why it's the
also.
cheapest Mag 7.
that's right there.
Define discount.
Price now-
Discount to
now-
what?
let me
Discount to
tell you
what?
something. It's always been
No, it's
among
always
the
been, yeah.
cheapest of the Mag 7s.
Well, because you're buying an ad company, right? I mean, that's basically what it is. That's where they made their money. But this may all turn around. It may be down 15% tomorrow.
You also have the DOJ ruling that is ultimately we're going to learn in August what the resolution of that's going to be. Do they need to be broken up? That's important as well. But this quarter,
But that's
this
50-50 if the sum of the parts
absolutely.
is worth
But
more
why
than
has it gone up 10 straight days? It's about this quarter. It's about Google Cloud being really strong. It's about digital ad sales coming back very strong in the quarter. And I think tonight they're going to report a really good quarter.
Yeah, Bryn, we almost buried the lead. It's coming off 10 days in a row.
And this is why I say, what does Google need to do to have that stock fly the next 12 months? Here's all Google needs to do to have that stock be a beast the next 12 months. They need to just keep putting up good numbers. They just keep putting up good numbers quarter after quarter after quarter. All this talk, all this debate will start to end. As long as they just keep coming in, hammering good numbers. Good number after good number after good number after good number. Right now, it's like this whole debate about, search might drop, ChatGPT, Perplexity, blah, blah, blah. How much Gemini going to get, right? Copilot, whatever. It's a lot of talk. Put up the numbers quarter after quarter after quarter, and the talk will go down, 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 down. And it'll just keep going down. But they got to keep putting up the good numbers. As long as they do that, Google stock will continue to come back, and people eventually start giving up on the bear case.
It's trying for the longest winning streak ever today. And now it gets added to the top picks list at Oppenheimer. What are your expectations for this evening?
Well, I think that with Google, the expectations are for 11 and 16% revenue and earnings growth. But I think as everyone's talking about, whether it's Claude, Gemini, et cetera, all of these LLMs are going to look more and more the same. And so I think where Google long-term has a challenge, if you look at these companies, Google's actually the most vertically integrated to win. And if you think about Gmail, Google Calendar, Google Search, you have YouTube. Google has all of our data. They could easily flip that on and make a really powerful AI assistant, but I think it would freak everybody out because at the end of the day, guess what? They still sell our data. And so I think that where you have, Mark Zuckerberg is just like full force, poaching talent. They can get their AI in Instagram and Facebook and monetize that. I just still feel that with Google, it will remain a cheaper name, because I don't think their ability to actually monetize their AI has been clear. And I don't think we'll get any clarity of the ability to monetize, which is the key thing, monetize AI. Whereas with Meta, they're going to monetize it via Instagram and Facebook, because we all buy stuff every time we go on there.
That is the key.
We all buy stuff every time we go on there. I don't know about that. I think a far majority of people do not buy anything when they go on to Facebook or Instagram, right? They might see a lot of ads, but I think actually a very small percentage actually end up buying something while they're on there. But, here's the thing, okay? I think she was making a solid point here, and this is the last really overarching point I want to make. That's a great tip for investors to understand, stocks on a higher level of why this stock does really well versus this stock. What she laid out there in Meta versus Google, what does that sound like Meta's doing? What does that sound like Google's doing, right? Investors view Google as being on what? On defense. People view Meta as what? As being on offense. And you're going to pay a very different price
for a company that's on offense versus a company that's on defense, okay?